My name is Jaideep Prabhu. I'm the Nehru Professor of Indian Business at Cambridge Judge Business School. And it's my pleasure to introduce and moderate this session on Indian companies on the global stage. It was not too long ago that several leading lights in the world of international business were writing off the chances of Indian and emerging market companies on the global stage. In 2000, Christopher Bartlett and Sumanta Ghoshal, leading figures in international business, authors of a celebrated book on the transnational corporation, had this to say about companies from developing countries. They've entered the game too late, they don't have the resources, they can't hope to compete with the global giants. And even more recently, Tarun Khanna and Krishna Palepu, professors at Harvard Business School, said it is difficult for emerging giants to compete against world-leading players, particularly in developed markets, in part because of institutional voids in their home markets that limit their access to, for example, expansion capital, sophisticated R&D capabilities, and top-quality talent. But this seems like history in light of more recent comments. This quote, taken from The Economist in 2010, many of the developing world's champions have risen from zero to hero in just a couple of decades. And a quote from Javier, a leading marketing thinker, marketers from emerging markets are now globally expanding, becoming major global competitors in advanced markets through acquisitions and organic growth. Speaking of acquisitions, Ranbaxy Labs, one of the leading pharmaceutical companies, if you look at their case, in 1989, 0% revenues from foreign markets. In 2006, 68% of revenues from foreign markets, on the back of 13 cross-border acquisitions in the years leading up to 2006. And they're not an isolated example. BCG has an annual report called Global Challengers, which looks at leading companies from the emerging world. In the last decade, Indian firms have consistently made up 1 in 5 of those global 100 challengers. The Tata Group is an outstanding example of such an Indian company which is on the list. Various members of the Tata Group are in the list. And it's fairly well known that the Tata Group is amongst the largest employers in the UK. Now, that raises the question, how did Indian firms manage to do this? How do they manage in a very short period of time, 10 to 15 years, catch up with global competitors who've had 100 years to build their technology, their brands, their R&D? Along with a couple of co-authors, I looked at this question, and Javier, you may be interested to know, we used a sample from the Bombay Stock Exchange 500. We looked at these companies, Indian companies, owned by Indian owners, and we looked at their performance in the last 15 years in developed economies, Western Europe, Japan, North America, and we found that the ones that were most successful in developed economies were able to learn and overcome their disadvantages in 2 ways. One, through their CEOs, particularly when their CEOs had some kind of developed country experience, either through their education or through their work. And equally, they could learn from other members of that business group if they were part of a business group. I think we have an outstanding example again. In the Tata Group, we shall ask David his thoughts on that. Nevertheless, many interesting questions remain. For instance, what really are the competitive strengths of Indian companies, particularly in developed economies? What gives them an advantage? What Indian companies do we see being successful in Europe or in the US? Can innovation in India be a source of competitive advantage? Is it a source of advantage? Which Indian companies have gone global on the back of innovation in India? And I'm sure you'll have many more questions you'd like to add to this list. To address these questions, finally there's a question about acquisitions. We have 2 speakers, David Landsman, Executive Director and Head of Tata Europe, and Javier Tordable, Deutsche Borse, and Head of India and BSC Partnership. So let's quickly proceed to the conversation. And what I'd like to do is to start by asking our speakers to briefly say a bit about themselves and their current role. So, David, may I start with you? Could you say a little bit about your career and your current role, please? Thanks.
Thanks. I'll skip over most of me and move on to Tata. I used to be a British diplomat. I'm now the representative of the Tata Group in Europe. Now, I think in explaining what I do and how I fit in, I think I'm beginning to answer some of the questions about Indian companies, because I think what's interesting about the Tata Group is that we are a group of companies, about $100 billion business altogether. Each company is operated independently, separate companies. It's not a conglomerate with a single kind of reporting line. Each company is operated independently. 32 of those companies are publicly listed, so they have shareholders other than Tata's. But the holding company, or as it's called in India, the promoter company, is privately owned, and 2/3 of the equity of the holding company are in the hands of the charitable trusts set up by previous generations of the Tata family. So why do I think that's relevant to this? I think long-termism is a relevant factor. Tata is not, as I've just described it to you, it's not a family business. Some of the Indian businesses that are being successful are family businesses. What we have in common, I think, with the family businesses, they were not one, is that capacity through our structure and our governance and our capital structure for a lot of long-term thinking. And if you think of not just Tata, but if you think of Tata and some of its acquisitions, these are not just financial investments. These are very much investing in industry for the long term. So I think I've gone over my CV and I've gone over my time probably, but there's a start on who I am and where we are.
Nice start, David. Thanks. Javier?
Thank you. Thank you for inviting me. Actually, the invite was for the CEO of Bombay Stock Exchange, Mr. Ashish Chawan, who kindly delegated it to me. Why? Because we have a long partnership with the Bombay Stock Exchange. I am from the German Stock Exchange, so probably your expectations are a little bit puzzled because you expected the CEO of the German of the BSE, and you found the German Stock Exchange. But the BSE is one of the examples of becoming international by partnering with international exchange like the German Stock Exchange, Deutsche Börse. We own 5%, but we work together in like if we were their employees, to be honest. We are their international face and sales force and technology arm outside India. I'm personally been with the Deutsche Börse for quite a few years, and since basically 2 years ago, I'm responsible for this cooperation with the Bombay Stock Exchange, working together with Ashish and Bala, which basically made an impact when they came into power in 2010. And they made a big change by basically trying to go international by partnering with ourselves when it comes to market operator, but also with the Standard & Poor's when it comes to indices, with Deutsche Börse again for when it comes to market data. And yeah.
Thanks. So, Javier, if I might just follow up with you. You have this very interesting role, and I'm looking at CV and it says your role is partly to promote India and BSE throughout the world.
Yes.
So presumably part of that involves dealing with Indian firms abroad. What are your thoughts on the competitive strengths of Indian companies?
Okay. Yeah, I've been the last 2 years promoting India probably everywhere in the world, from Sydney to New York. Basically, we do road shows every month. Obviously, our customers are the banks and the hedge funds, basically promoting India and the BSE. To be honest, these days it's quite easy to sell India because it's becoming one of the attractive places to be. So that's different to when we bought our stake on BSE in 2007, which was a bit more difficult, especially the years after. But basically, just one example. We gave the BSE our trading platform, and it took them 6 months to implement and to go up and running. And by the way, we, German Exchange, we signed a letter saying this is impossible, it will never happen. If you want to do, you take your own risk. Well, 6 months after signing that letter, the BSC was up and running in every segment, every market, and with no glitches whatsoever. So that gives you already one of the main strengths of the Indian nation, which is an amazing capability of execution, especially when it comes to software, because obviously we gave them a state-of-the-art platform. But yeah, one thing is giving, another thing is implementing, and they implemented it. So execution capability is one of the main things. They're very able to navigate any kind of a scenario that we Westerners think that is impossible to solve, because they are accustomed to doing this in their own country. So there's no hurdles or bureaucracy that basically makes them stop, and that's that kind of nice commercial aggressivity, and I call it aggressivity, I think is something that most of the European countries have forgotten about it, and I think that's a great strength that they're showing these days. Then, obviously, the last, especially strength that we see as a Deutsche Börse, as a German international market operator, is the potential of the retail audience. I mean, only 2% of people in India are in capital markets, whereas 20% are in real estate and other asset classes. Well, only 2% invest in capital markets. But out of these 2%, probably half of it are individuals. So the growth prospects, given the ages of the nation, where basically half of the population is below 25 years old, the expectations is by 2030, these 2% in capital markets will go up to 20%. And obviously that basically goes far beyond the size of any European market as a whole. So again, very, very aggressive when it comes to implementation, very IT savvy, because they implemented our German technology in every segment, even in segments that we, Deutsche Börse, still have not implemented in, and very retail driven, very entrepreneurial. And those are things that people see immediately.
So you mentioned innovation. Javier, could I ask you, so you said they're good at executing. Fine, that's an important skill in the global competitive game. But innovation is even more important, to go beyond simply implementing somebody else's technology. What's your view on the ability of Indian firms or India PLC to innovate?
I think the Indians are probably the best entrepreneurial nation worldwide. I mean, our colleagues tell me all the time that they're forced, some of them, to survive in many senses. They're worried that means that gives them this entrepreneurial spirit that follows them the rest of their lives. I think creation, being an entrepreneur involves creating something. You're a creator, and the formula of creation is basically creativity plus power management. So you need to create something, and then you need to be able to satisfy your stakeholders as to make it happen. This second part of the equation, I think the Indians are very good at this. With the creativity part is very difficult to generalize, but obviously, given their immediate demands and problems that they may face, probably there's room for improvement there. But again, in order to innovate, you need to be able to be creative, plus be able to implement it and do it in a way that you satisfy all your stakeholders in the broader sense, from a government to press, to employers, to customers, to absolutely every stakeholder. So again, this second part, I think there's many cases of successful Indian companies. When it comes to creativity, very typical in the Indian markets, in the emerging markets in general, that's normally not the reason why they're known for. But still, it depends in which niche you're talking to. When it comes to the finance market, it is true that they haven't been the advocates of some of the innovations that came into the Western markets when it comes to cash equity trading or derivatives trading, because they were late implementers of this type of segments. But again, once they were into it, they're the ones coming up with some products that are completely unknown and unthinkable here in the Western market. So,
for instance, could you give?
Well, for example, they're coming up with an offer for sale market within the exchange. So for non-public companies to go IPO, they're coming with quite an innovative concept that is not the AIM market from the London Stock Exchange, but is an offer for sale market in a way that is actually successful and is working. Again, I mean, the main idea of trying to go IPO without being a public company is not new. But they come in a way that make it a special, customized for the market that is new, and then therefore that can be imported back to the Western market. So again, I mean, anyone who is entrepreneurial by definition, it ends up being innovative in some sense. But again, entrepreneurial, for me, the most important factor of the equation is the second part, is being able to manage power properly with all the stakeholders involved.
David, thoughts on innovation, Indian companies' ability to innovate?
Well, innovation increasingly, I think, is globalized, and one of the reasons why Indian companies, I think, are attracted to investment in Europe is because you've got access to very good R&D and innovation facilities. So there's a partnership here, and we shouldn't expect it to be all one way. But take tech, TCS, Infosys, Wipro. Again, it's global, so you're not going to be able to develop a credible tech business in India which is isolated from the developments in the rest of the world. But perhaps you can add in some of the functions some more specific Indian kinds of innovation. I mean, I'm rather attracted to the arguments which say you've got large data centers in India. You can either treat those as, if you like, source of a cost advantage, pure and simple. But what you've actually got are lots of very well qualified people, probably almost certainly rather better qualified people than those you would have sitting in data centers in Western countries. And if you exploit that carefully, and if you've got an approach to innovation, you can get lots of good ideas from very bright people who are not just going to sit there all day doing the processing, but are going to be hungry to find new creative ways to improve the processes they're working on and to deliver better results. So now that what you've manifestly got in TCS and Infosys and Wipro are not simply back offices buried in India in order to save money. You've got dynamic sources of innovation from both ends, as it were. So there is a real, in that kind of synergy, and why is it a recent phenomenon? Well, tech is a relatively recent phenomenon, and the globalization around it is a recent phenomenon, and the speeds of communication are a recent phenomenon. So that's why India is so well placed, perhaps now, as opposed to a few years ago, to play such a dominant role in this area.
Great. I think we'll throw it open to the audience. I just want to check, Rakesh, how much time do we have? I think we started at 3, so can we go to?
We've got another about 15 minutes.
15 minutes, excellent. So we can take a few questions.
Yeah, my question is for David.
Who you are?
Yeah, the name is Jay. I'm CEO of a company called Mercurius IT. I'm ex-TCS, by the way, and my question is for David. I learned what I do today from TCS and then started IT consultancy services business about 10 years ago. And I'd asked a question to a Tata director about 10 years ago, why TCS, being the biggest, most successful IT services company, doesn't get into IP creation. So serviced by Indians is great, but not made in India or created by Indians. There are no great IT or tech products created by Indian companies. Is this something Tatas are considering, that with such a big force, 300,000 people plus actually, TCS would lead the way now and start developing products rather than keep servicing products developed by others?
Well, I'm loath to. I almost felt when you started I should turn the questions over to you and say, well, was what I said about the TCS and the like right, since you've actually worked for them? And I'm loath to gainsay somebody who's got that experience. But what does TCS and I guess the others do is not just to, as you say, service with existing software and whatever, but to develop software. For example, the banking sector. Take a concrete example. TCS has developed its own systems for banks, which it then helps its clients to operate. So, if that's what you mean by IP creation, I can't believe that those systems are anything other than IP, and they'd want to protect them with IP. So I think it is, to my mind, doing what you describe, unless I've misunderstood what you describe.
Okay. Perhaps a few things. I mean, it is true that the Indian tech companies have been trying to get domain knowledge, and Infosys, as an example, has struggled a bit and has fallen back repeatedly on what it's good at rather than what it wants to be in order to compete with the Accentures. But anyway, that's another big topic. Yeah.
Thank you. I'm Daya Tusu. I'm professor of communication at University of Westminster. And my question is sort of related to the previous one. India already is the second largest user of internet in the world. It crossed 300 million earlier this year, so it's now, after China, it's second largest. And yesterday, the Prime Minister of India announced a major Digital India project. And one particular, including Tata's, but one particular company, which is Reliance, and their Geo program, which is about bringing broadband to every village in India eventually. I would just like to hear a reflection from, especially from a gentleman from Tata here, about has TCS got a plan to develop an Indian Google or an Indian version of Facebook, which is not a derivative? In other words, they're not doing electronic coolies job. They're actually innovating something which is indigenously based. Thank you.
Well, I'm not the expert on TCS's program, and I suspect if I were, they wouldn't let me tell you about it. But I think to go back, I mean, I don't, and I defer to experts, but I don't think to be a successful business in the field that that TCS is in, you need necessarily to develop the next Google. I mean, TCS is positioned in the market. You know the Indian companies. You know Accenture, you know IBM. You know. I haven't noticed Accenture developing the next Google, but it's still a respectable company. I think we go back again to I just mentioned the banking example, but there are others of systems which are widely adopted now by financial service customers in these areas, which have been developed by TCS. TCS is doing a lot of work in AI, for example, and I should think over the next few years we will see some significant results in that. It does have a significant R&D program, so I don't recognise that description either of TCS or I'm sure of its Indian competitors. What I think is interesting, just to pick up one other point, you mentioned the Geo project. And I think there's some real opportunities for innovation in the methods that are going to be required to connect in one way or another all the parts of India and all the people in India, because it's the challenges of doing that across a large country with large rural areas and dissipated populations and poor populations. Another one of our companies, Tata Communications, has been involved in the dissemination of ATM machines across large parts of rural India. Some people may say, well, isn't ATM yesterday's technology? Isn't it all going to be done by mobile technology? Well, it may be or it may not be. But in either case, there are going to have to be, there's some real opportunities for innovation in the ways in which you provide the kind of services we're all used to in that environment, in that context. And that again is potentially going to give some Indian businesses real opportunities, which they will then be able to bring more widely outside India.
Javier, I mean, as someone who's perhaps can can speak somewhat objectively about India. You spend time in India.
Yeah.
You're there. What's your view on this? I mean, when you look around, not necessarily just the BSE, but maybe some of the Indian companies that are listed, when you travel in the country.
I mean, the way I see innovation is you end up innovating because your competitive environment is so exhausted that you need to come up with something disruptive, or because there's extreme barriers that you need to overcome. For example, I mean, when it comes to peer-to-peer payments, you know that the most sophisticated one is Kenya. They do transfer on their cell phones, and we don't do that here in the UK. Well, when it comes to payments in India, they do have prepaid card systems that are much more sophisticated than we have here. So, and that kind of innovation comes from a need, from lack of proper systems and banking systems that everyone is inside. So those are the type of innovations that I think India is very much exceeding. Obviously, what you see in a country with 1.2 billion people, where still many standard products that we have in the Western world, they don't have it. Most of the entrepreneurs, they go for this easy type of innovation, which is something that is successful in the Western world. They should be able to work here. I got myself an Android phone through an Indian producer called Micromax, which obviously cost me £50 instead of a Samsung XE500, and it was probably even better than the Samsung. So nothing against Samsung, but the truth is, again, when it comes to overcome some of the most day-to-day Indian problems like transportation, the Tata car is an innovation. I mean, the Tata car, so small, is to basically give an answer to the problem of transport in India, and therefore that's an innovation. And we copy that from here in the Western world. So I think, I mean, there's the biggest strengths that I see is again the implementation part of it. I mean, there's many Indian entrepreneurs here in the Western world that are being more creative here outside India than when they're in India themselves. Why? Because they respond to different circumstances. I mean, you respond to your environment. Therefore, here there are much more. I mean, if you talked about the fintech space here in London, 3 out of the 10 most prominent figures are Indian individuals. Why is that? Because it's a great mixture of their entrepreneurial world and their amazing, analytical skills into a very sophisticated financial system environment, which is London. No? But when you go to India itself, there's amazing entrepreneurs as well and amazing talent over there. But obviously, they respond to what is their surroundings. Therefore, they need to focus in the mass market needs. And again, when the companies that go IPO at the Bombay Stock Exchange, they're the most like there's no like a high tech growth segment as such like there is in the London Stock Exchange or even Deutsche Börse. Is more, again, companies that have made it through the startup phase by supplying a standard need that is actually scarce in India.
So appropriate, and I think Lee was talking about in the previous panel, appropriate technology, right? And so high tech, for the sake of high tech, doesn't make sense in the Indian context. Yeah, we have another question.
Hi, it's Michele Fiorentino. I work for BP, and I look after business development opportunities for downstream in ASPAC, and India is a focus area for the BP group. And the question I have for both of you is, what are your thoughts on the role that partnership with Western companies plays in India PLC growth strategies? Do they have one? Do they need one? And sort of, do they want us? Sort of what your thoughts are on that.
Well, I mean, in my case, is a clear yes. I mean, because I mean first of all, in India there's been two exchanges since 15 years, more than that, since 1994. Whereas here in Europe we have competition between market operators since 2008. So they've been having competition for the longest time. So when you have competitors and you're not a monopoly, you need to come up with different edges to your product offering. So what the BSE has done is, okay, I mean, there's the other exchange, the National Stock Exchange. Although BSE is the oldest Asian exchange, the one with most listed companies, over 5,000 plus. But for whatever reason, in 10 years, from 2000 to 2010, they lost ground to this new competitor. So what was their strategy? We need to become as international as possible. Not only because we have a product need, which is our trading platform is not good enough. We need to change it. So we need to partner with one of the biggest market operators like Deutsche Börse. But it wasn't only Deutsche Börse. It was a Standard & Poor's, the biggest index providers worldwide, in order to combine their Sensex, already well-known Sensex index, with the Standard & Poor's index family. So they know that they need to, in order to be successful at home, they need to get the branding and the knowledge and the expertise from some foreign companies. I mean, I've never been working with such talented people who basically are able to take orders and give orders either way. They know what they're good at and what they're not good at. I mean, at least in our experience, having a partner in India, which obviously for Deutsche Börse gives us the possibility to come up with an Indian strategy, which as a global operator we need to have. We need to have an India and Chinese strategy, where in India our strategies is basically based on the BSE. But for the BSE, they need to have an international strategy because the financial markets are global. I mean, most of the same customer base that Deutsche Börse has, 80% are in India. The same banks, the same funds, the same proprietary trading houses. So they are aware of this. They have basically let us put all our assets within their structure. Not only we own 5% of the BSE, and by the way, we can't own more because of the legal restrictions, although that is actually in the Financial Times today, there was a piece that everyone is lobbying to increase those limits because we would like to buy more. But also we have put our trading platform, our networks, everything inside. But what they have gained in return is Deutsche Börse selling on their behalf worldwide. And they're quite happy with this. So at least the case that we have found out is somebody who is humble enough to admit their shortcomings and needs. And they have found international partners because that gives them an extra edge when selling in India. When I go to India, I'm the one doing the talking. When they come outside, they're the ones doing the talking. So I'm the exotic one when I go to India, and they want me to to show around all the banks. Look, Deutsche Börse, they're partnering with us. So I think it's working properly. So I hope you can do it too.
Yeah, I think absolutely partnerships are part of the story. If you take, I'm afraid I wasn't here earlier on today, but I'm sure Make in India has come up somewhere today. If you take the Make in India initiative and the steps the government has already taken to widen the possibilities for foreign participation in certain sectors, insurance, defence, so. This is precisely because there is a recognition of a need, if Make in India is to be successful, for foreign partnerships. And we, for example, have a number in the defence and aerospace sector with non-Indian companies, in insurance too. In retail, we have a partnership with Tesco in India. Controversial sector, but it works. Yes, absolutely. I think there is going to be an increasing opportunity for this. Now, maybe some people think that this is a short-term measure, and eventually the companies will be self-sufficient. I doubt that that's the way it will go, and I doubt that's the commercial imperative. Because again, coming back to this development being globalized, there will be advantages to both sides. And I think what is also interesting is that in a number of these areas, I think our experience and others would be that there are two-way benefits. It is not simply a one-way technology transfer from a foreign company to an Indian one, or cheaper production in India 100% managed by the foreigner and simply with a capital contribution from the Indian side. Far from it. There's a lot to learn on both sides. So I think this is something which will continue. It may not always be easy for people to make it work on a particular occasion, but it's got a good future, I think.
Hi, Rakesh, I'm looking at you. Do we have time for
One final question.
one
for
final?
me.
Okay.
Very quick.
Oh, you get to ask the question. Fantastic. Go ahead.
Very
Okay,
quick question.
there you go. Over to you, Rakesh.
From to David Landsman. Could you put a date on when Jaguar or Land Rover will have a driverless car ready?
Well, you wanted you said we were running out of time, so I'll give you a very short answer. No, I can't give you a date, but I'm sure this we'll look back and we'll wonder how why we ever drove cars, I suppose, except for fun for those who want to do so. But no, I'm not going to put a date on it. But there's a lot of amazingly exciting things going on, and it's an interesting example of a company, Indian-owned company, operating in the UK and globally with innovation from all sorts of sources. And that's one of the strengths of large groups, of which Tata is one of the largest, but there are others where you can get the benefits of a lot of good ideas from a lot of sources.
And why would you need a driverless car in India when you have so many people who can drive? On that note, I'd like to thank Landsman, Javier, Tordable. Thank you very much.